Hello, ladies and gentlemen. Welcome back to Altcoin Buzz Trading. I'm Randy. Today we're going to be talking about Bitcoin and Thorchain, also known as Rune. That's their ticker symbol. So let's get right to it. BTC yesterday, we kind of made a video about stop trading. Things looked like they were going to drop. They didn't end up dropping. Now we're getting a little bit more choppy, right? And so we discussed yesterday about waiting to see what Bitcoin was going to do. And well, it's consolidating up here. What it's doing is it popped up. It tried to go past our prior high and it's failed to do so thus far, but we are consolidating. So if we can continue to consolidate and even possibly bring a few more bulls in, we may go into our choppy range trading environment for kind of more longer term swing trading of, couple of days, couple of weeks type of scenario. But we're not quite there yet. We need to get above this 26,446 level. One interesting thing is my volume aggregation tool here yesterday showed that the bears are still kind of hanging out. At the start of yesterday, you can see here that my orange line was above my green line. At the close of the day, you can still see that my orange line was still above the green line, even though both of them had increased. Into today, what we're noticing is the greens continuing on. So the buying pressure is still around. We just need to know if there's enough to push us higher. So I think the bias right now for the shorter term is slightly to the upside. Our bias had been to the downside. Now it needs to flip a little bit to the upside. So again, keep in mind, like I said yesterday, you don't have to take any trades. This is not an environment you need to be very active in. You could just hang out. If you're newer to trading, what we do is generally swing trading. We try to take a trade for a leg up or two, depending on the market scenario. The market scenario right now isn't very friendly to taking legs in either direction. We just had a couple of, even the trades we talked about yesterday got stopped out. So it's just not a great general swing trading environment. If you do want to trade, if you want to trade actively, you have to do it in a shorter term time frame, okay? But right now with these swing trades, we have to wait and see what happens. And I'm a swing trader. I'm not a day trader, okay? So the swing trade here would be this. Swing trade here would be, you would enter about this 26,446, right? Your stop loss at the moment, if we don't go down any further, could be underneath the low from the open today. And then you have a multitude of targets. All right, there's a number of places this could stop. And I'm going to draw them for you, okay, because it's just a little bit easier. Number one is we just fail out of the gate. I don't know what level we could pop up and fail at, but we could fail out of the gate and stumble, kind of like we did over here yesterday. The second place we could stall at is there's a convergence between the 50 and the 200-day moving average, somewhere in this range. All right, the convergence is about the 27.6 range, so 27,600 could be a point of resistance. The high preceding that could be a point of resistance. The breakdown point here could be a point of resistance, and each of these could be a target. I mean, there's about 4, 5, 6 different places that we could continue with this notion going on up. And so you can draw these on your own chart. And what you want to notice is how it gets handled as we move up into those areas. Do we get a hard rejection like we did here? In which case we get rejected from the level. Okay, I need to get out. You don't always sell at the level. That's a strategy you can employ, is to set a limit order and sell immediately there. But which one to pick? It's really hard to tell exactly which one's going to become the resistance. Part of it's dependent on how bullish and how much volume we get breaking out of this 26,446. If we get a lot of volume, you can expect to move maybe all the way towards the top. If we get anemic volume, we may fail at this, this prior high right here at the 28,145. So it's kind of a pick your poison scenario. And if we do get the pop up, we'll talk more about that as we go. But if you have to participate in the rally, if it's something you want to do, then I think this is the trade to take. With the stop loss at about 2.84%, at about 25,700. And anytime you land on a big number like 700 or 100 or 500, go a few bucks beneath it. $3, $4, $5 beneath it, just so that they don't stop hunting you on the even number. That does happen. So that's what I think is going on with BTC. But once again, I don't think this is a scenario that you have to be involved with. But I will say, if you look at the volume aggregation tool, you look at the volume that's going on, you look at the fact that we're well off of these lows, at least in conjunction with the 2-hour time frame. the bias does point towards we're going to attempt a rally. Just like over here, we thought we were going to attempt a breakdown. We did that. We failed it. Now we're going to attempt a rally. It's just a cycle that the market takes, and you have to flow with it. Otherwise, you stop trading. All right, next on to the one of the only other bullish patterns in the market is Maker BTC. This is not Maker USD. Okay, now this has a cup and handle pattern. Hope you can see it. If not, we're going to draw it right now. A cup and handle pattern starts with an uptrend. Then you form a cup. Then you form a handle. All right. So this is a cup and handle. And it's actually thinking about breaking. We're getting real close to the breaking point. So what's the trade here? Well, if Bitcoin may try to start a bounce, looking for bullish patterns makes more sense. And this is the best one in the market that I saw. I don't look at every coin, but I do look at about 300 of them. All right, so this one, your trade is going to be pretty close to right now, as a matter of fact. Your stop loss is going to be under the whole thing for a 5.28% stop loss. Let me just zoom out here. Let me move this over. And what we're going to do is we're going to be drawing this on the daily time frame. And we're just going to take a measured move from this one pop. We're not going to be very greedy at all. And you would actually take this from the breakout point. So for a cup and handle, your traditional breakout point is going to be up here at the, again, this is BTC levels, 0.04589. That's going to be your traditional breakout point. We're going to take an early breakout scenario so we can limit our risk. And that limits our risk to 5.28% to a 4163. All right. And then, so first of all, it can run up into the top here, which almost gives you a 1-for-1, not quite. At a 0.88, that's not a 1-for-1, right? A 1 would be a 1-for-1. But that's just to the breakout point. So if you take this measured move, you end up with a 5.4 risk-reward trade for a potential of a 28% gain, potential risk of 5%, 5.25%. So that is, I think, the potential trade here. This has been setting up for about a month and a half now. And if this starts to go, number one, you're going to have elevated volume stepping in here. You're going to have the price candles moving up with that. Okay, now this is a little bit tricky because our entrance should be on the break of this trend line, which we're actually touching right now. So another thing you can do is start to layer into the position. You don't have to take your entire position in one go. You could take a half position, which limits your risk even more. And then as it further breaks out and some volume steps in, you could lean into that position a little bit more. And then if we do get to the actual traditional breakout point, and you still haven't had a full position, you could lean into the position there. It makes your risk a little bit heavier, but if it never gets there, your risk is actually decreased because of the smaller position size. So a bit of a give and take there. If you don't understand what I just said, just go back through it a little bit. Basically, what we're doing is leaning into the trade, limiting the amount of capital we have at risk, okay, is what we're doing. So, yeah, that's it. I think that's one of the best trades in the market at the moment if we go bullish. But keep in mind, this is a very fluid situation. We don't have a solid uptrend. We have an inkling of an uptrend. Let's circle back to BTC. Look at this on the daily time frame. Does this look like an uptrend to you? It is not. This is a fledgling uptrend. This is, if it's a baby duckling, maybe the egg jumped a little bit type of an uptrend. We're not even pecking to get out of the box yet. So these are all hypotheticals until something actually moves. The thing about right now is this is a very stagnant market. This is not a dynamic market. You don't have to make big moves. You really should be focused on learning is what you should be doing. So take all these videos, all these things I'm telling you, learn them, apply them to prior charts. Go find other strategies and videos that you find and kind of mishmash them together. Do they complement each other? Do the strategies not mesh with each other? And then from there you can say, okay, I kind of see what each person is saying, and then how do you morph that into a strategy that fits you? That's really how trading works. It's an amalgamation of your personality and strategies that you see across the paths that you travel, the people that you meet, right? That's really how this trading thing works. It's not about me just spitting trades at you. So anyway, that's really about it. We have a potential for a bull rally, but at the same time, this could fail. This is not a super healthy market. We failed to go lower, so now we may try to go higher, and that could fail as well. So pick your poison, trade smaller. And that's all I got for you guys. So I want you to have a good day. Stay very safe out there, tricky environments, and I'll see you next time. Bye.